Interest rates, most people think they're only for mortgages and savings accounts, right? But in reality, these numbers, set by central banks, are like gravity for the entire financial world. You might not see them, but they're constantly pulling on everything, from stocks to real estate, and especially crypto. Now, why does crypto feel interest rate changes more than almost anything else? It all comes down to risk appetite. When rates go up, borrowing money gets pricier. Suddenly, government bonds or savings accounts start to look pretty attractive. If you can get a safe, guaranteed return, why would you risk it all in the wild world of crypto? That's when the big money, the hedge funds and institutions, start pulling out. They trim their riskiest bets first, and crypto sits right at the edge of that risk spectrum. The result? Money flows out. Liquidity dries up. Prices start to sag. The flip side, when interest rates drop, borrowing is cheap and safer investments barely pay anything. Investors get hungry for returns, and suddenly the riskier stuff, like Bitcoin, Ethereum, and those spicy altcoins, start looking a lot more tempting. That's when you see wild rallies as everyone chases higher rewards. But it's not just about investor psychology, it's literally about how money moves. When credit is easy, cash floods in and crypto markets get supercharged. When money tightens up, leverage gets expensive, and there's just less fuel for those big price moves. Let's rewind a bit. Bitcoin's biggest rallies have often happened when central banks kept rates low and money was easy. On the other hand, sharp rate hikes, like those from the Fed or the European Central Bank, have triggered some nasty crypto sell-offs. It's portfolio rebalancing in action. Get safer, get smaller, get out of risk. And there's another layer here. Lower rates don't just pump up prices, they actually help the whole crypto ecosystem grow. Startups, exchanges, and new blockchain projects can raise funds more easily because investors are searching for the next big thing. High rates choke that off, making it tougher for innovation to thrive. So, even though crypto prides itself on being decentralized and outside the old financial system, it still dances to the tune of central banks. One surprise move from the Fed or a hint from the ECB and Bitcoin can moon or crash within hours. End of the day, if you want to understand what makes crypto boom or bust, don't just watch the price charts. Watch the interest rates. Because money goes where it's treated best, and in this market, that always starts with central banks. Join us and reach your next crypto level.